Cameron Brandt, Director of Research, EPFR, joins in. Cameron, good morning. Thanks for talking to us. Cameron, let's start with the big one. Is China the only game in town?
It might seem so the past couple of weeks, but I don't think so. Certainly there's considerable catch-up potential there, and we did see record-setting inflows last week into China equity funds. But in a very short period of time following the euphoria of the Chinese policy adjustments and the Fed's 50 basis point rate cut, we moved very quickly back into a what have you done for me recently sort of approach to flows. So certainly this week so far, flows into China funds, while still positive, have decelerated rapidly. Flows into U.S. equity funds are, going up, but not spectacularly so. After finally seeing an end to an 81-week run of inflows, so that come to an end. India equity funds are again beginning to see a little fresh money. What we are seeing at the moment is a shift in focus onto sector funds. We have a corporate earnings seasons coming up. And since the narrative has been dominated so much at the macro top-down level, what are Chinese policymakers going to do? What's the Fed going to do? I think investors are really interested in diving in, especially to the guidance that accompanies this earnings season's reports, to see if the policy steps are actually moving the needle at the corporate level.
Right. Cameron, what is the nature of these funds? And I'll talk about India in a minute, but I want to keep the focus on China for a bit. Are these funds tactical or strategic allocations that are being made? Are these coming in from long-only funds? What is it that you're picking up?
Well, we're certainly seeing more money come into long-only funds than we have before. Previously, an awful lot of the money was going into domestically domiciled China ETFs, and as we know, those can be quite lively. We did see record-setting flows into funds domiciled outside China last week, which is definitely a positive shift in terms of seeing longer money committed to that market. But we have certainly been through this before. The events in the middle of 2015 come to mind. So while there's definitely almost a relief rally going on in China at the moment, you do want to be careful projecting too much on sort of a week-to-week basis.
Cameron, hi, Tamanna here. Just want to get a sense of how you are seeing, I mean, we're talking about China and India in context of each other, but how you are looking at India by itself. Debt markets or the debt side has been more attractive in terms of fund flows. Are you seeing perhaps that whole move changing, or you see equity flows holding off for some time? Is valuation the key concern as far as India is concerned?
I think that valuation definitely is starting to be an issue. India has had tremendous momentum for quite some time now, and at a certain point, people are going to kick the tires. I think we've certainly been seeing that in the U.S., and I think we're starting to see it a bit in India. But India's underlying story remains very attractive, especially if we sort of move into yet another leg of global trade becoming more difficult due to Sino-US tensions and Europe's struggle to deal with the challenge from China's automotive industry. So I think India is a story that stands slightly apart. So I expect it to continue to draw fresh money. India's allocations among the diversified global emerging markets funds were at a record high coming into September. So in relative terms, fund managers who make comparisons are still seeing more upside to India.
Cameron, I know you can't predict what happens next, but you've been a trend watcher for decades, and you know this better than any of us. Do you anticipate flows coming back into India? I know we are still net positive on inflows, but do you anticipate a return of strategic money coming back into Indian equities?
I think so. I think India remains one of the better stories out there. We're obviously going to have, I think, well, not obviously, but I think there's a very good chance that the remaining 11 weeks now of the year could be quite volatile. Events in the Middle East are still playing out. We do have a fairly significant presidential election over here. Europe is dealing with multiple challenges. But I think overall, you may start to see a little bit of window dressing money come in a few more weeks. We usually do see the more successful markets attract some end of the year money as fund managers sort of make their portfolios match what the market has delivered. So I think the trend will be upwards. I do expect it, not just for India, but for most dedicated country fund groups to be bumpier. And that may well carry on into early next year. But even though there have been some dips in India, given the sheer run up, both in flows and your key market indexes, I was anticipating that would happen several months before it finally did. So in some senses, India, from a fund flow perspective, is already a bit ahead of the game.
You are the one person we love talking to when we're trying to decipher what's happening on flows. But you've tracked this way too long, and hence we'll take this, just the way you said it. You do anticipate some flows returning back to Indian equity markets. Of course, in order to window dress in the next few weeks, you could see a pickup of that. Cameron, great talking to you, and thanks for keeping up. We'll hopefully see you soon.